Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Apple investors and traders have been making much ado about the stock's weak technical picture here, but right now we're going to talk to someone who sees that technical picture as a buying opportunity. That person is our tactical trader, Kevin Cook, and he joins me now. So you were recently, 5 for 5 with profitable options trades on Apple with an average gain of over 30%, right?
Yeah, that was for the tactical trader portfolio, so that's all documented.
Yeah, and you dove back in again recently while others stayed to the sidelines or sold. So what's your thesis here for making money in Apple over the next few months?
Yeah, so we took our profits when the stock rallied to 700 like we expected it would, and the rally to 700 was pretty quiet, pretty tame, and there wasn't a lot of follow through. So we were sitting on some profits there, and we were like, let's take the rest of them in and see what happens here. And it was a good move because the stock has fallen back. I'm still a bull, and I've got the big picture here. I've got 50, 100, and 200-day moving averages drawn. I've also got some support lines. You notice yesterday we bounced off the 50-day moving average around $651. But what's key here is that the stock had broken down through the 655 area, which had been support like 3 times since late August. So that was technically it was like anybody who was on the fence was starting to sell more. And we're 2 weeks away from earnings. Yeah, we had the big iPhone run up, but it wasn't what everyone was expecting. Large investors were pretty satisfied and probably took some profits because they look at it like, hey, if I don't sell some of my Apple here at 700 and it goes to 625, what am I going to look like to my investors?
Right.
Which is the opposite psychology in the short term of what I was saying, our reasons for buying Apple options when we started in mid-August through mid-September. We did those 5 trades in about 30 days. I said fund managers who don't own Apple below 650 are going to be in trouble. So that's why they're scrambling to buy it, and that was the run up to 700. So that's the big picture look. We'll drill down in a minute.
Okay. Well, now comes word, rumor, call it what you will, on the wires. Wall Street Journal, CNET I saw, some other places online, about a possible iPad mini.
Yeah.
Now the rumor here suggesting Asian suppliers have started the mass production of the components for this iPad mini. Is this rumor going to keep buyers interested around that 650 level?
I think so, and we've got a little bit of a pop today. Like I said, we bounced off the 50-day moving average yesterday. Here's a drill down, or looking a little closer. You can see I don't have the 50-day moving average here. I have the 10, 20, and 40-day moving averages here. But that spiked down yesterday, bounced off the 50-day, got us back above 661. Not a big rally though on this Wall Street Journal report. We're not up 1%.
Right.
Okay, we're just up a little bit, trading in the mid 660s. What I want to point out here, and I think it will keep buyers coming in, but we've got, this earnings report that many are still digesting. What they're, analysts are taking, what are we hearing about the iPhone sales and plugging that into their model and then tweaking their estimates. Now, taking a closer look here. 10 and 20-day moving averages cross bearish. That's a sell signal for a lot of technical folks. And that's the 40-day moving average, the green one. What I want to do is back up to July when we were down below 580. The 10 and 20-day moving averages cross bearish. So these things happen over time. The 10 and 20-day are always going to cross bearish. You're going to have these ebbs and flows in the stock, but the trend is still higher. That gap down was the July earnings report back when we went down to 560. And that's when I thought I had said the stock was going to go lower from 600, and that was it. You had to buy at 560. That was your last chance to really get a hold on Apple below 600. So technically, the stock is still weak in the short term here, and it's going to be under some pressure. But I think this is a buying opportunity into the next earnings report on October 16th, I believe.
Any risks of playing Apple options right around the earnings report time?
Buying call options, especially the way I've done it outright, not spreads. I'm just, we bought the January 650 call for between $50 and $60 in the past week. And, so we've got, for one call option, we've got, roughly $5,500 of risk out there. And yeah, if the stock were to fall back, let's take a look at my support levels. I have 640 as a support level because the old high was 644. So I think you'll see support there. And then 620 was a resistance level that took a while for the stock to get through. I think that's as low as the stock will go. But if it does, yeah, our Apple options are at risk because they will lose a lot of percentage. The stock might lose 5%, but the options could lose 50% of their value. So yes, it is very risky playing the earnings. This is calculated risk to me. I'm really saying, I'm risking, $10 or $20 to make 20 or 40. And the other thing I want to note is the 100-day moving average at 615, right below that support level of 620 I see. I don't even see it going there. I think yeah, we could drift down to 640, but this will get bought up into earnings.
Okay. And do you have a position on or own Apple?
Just for the tactical trader, we own the January 650 calls.
Okay, sir. And you can follow Kevin's column, Cook's Kitchen, on Zacks.com. Link to it right off our homepage if you're not there already. Just scroll down the page till you see Kevin's picture, and the headline that's next to it in that space is the live link toward that column for that particular time that you're on the website, if you understood all of that. With Kevin Cook, I'm Terry Ruffalo.